A likely scenario in the Twitter Elon Musk case is that the judge in Delaware rules that this situation cannot be ruled by an M&A judge and throws it back to the SEC because the main claim of Elon Musk's party is that they were deceived through wrong filings, namely the robots, and therefore made a bid for a company that actually wasn't worth as much as they stated they could be worth because they misstated their actual user numbers and things like that. This is one of the scenarios, of course, we are conjecturing here, but as a hedge fund, we sometimes get involved in situations like this, and we right now don't have a position specifically on this trade, so please do your own work. Don't take this as investment advice by no means. We are long Tesla, but we don't have let's say, a short position in Twitter or anything like that. The point here is to convey just one possible scenario and give people a bit of a sense for how these things play out typically. And the purpose of this podcast, of the Not Even Wrong podcast, is to give people a sense of what it feels like to run a hedge fund. And some of you might actually choose to go into things like M&A or special situations, and then you will have to actually be able to make judgments, such as, for example, how will a judge rule on this type of situation? It's not easy. It's very difficult to rule court cases, but given our experiences, particularly my partner's experience, we think we have a pretty good grasp of what a most likely scenario would be in this case, and I want to talk about this in this episode. This is the Not Even Wrong podcast. It's August 12, 2022. This is Krim Telco. The market's still open. We are roughly down 26% for the year. The market's down 12%, and we're underperforming by 14%. These numbers could change as the market is still open. Now, let me elaborate on the Twitter Elon Musk case. For those of you who are new to this situation, Elon Musk made a bid for Twitter at, I think, $54 a share, and then later on retracted and said, I don't want to buy the company anymore because they are cheating on the number of users that they're reporting, because they're saying that they have, let's say, 300 million users, of which 200 million are daily active users or monthly active users, I don't know, something like that. And in fact, a lot of those users are not real users, they're robots. And the company has publicly stated that less than 5% of users are robots. And it turns out that maybe it's more like 30 to 50% of users in Twitter are robots. And that is the contentious situation here. Musk is saying, you were misleading me. You had a lot more robots. You have a lot more robots on the platform than you actually publicly stated. I made a bid in good faith, reading the public statements that you offer as a public company. And since now I realize that you actually have a lot more robots than real users, I don't want to buy the company anymore. Twitter is saying, listen, first, when you make the bid, you said you don't want to do due diligence. You withdrew from the right to do due diligence. You said this bid is not contingent on due diligence, and therefore, no matter what, you have to buy the company. Musk is saying, yeah, but listen, I waived my right for due diligence because I was very concerned, I was not concerned about all the things that you publicly stated. And I thought, given what you publicly stated, I can make a good judgment of what this thing is worth. Also, I'm the biggest user of the platform. So I think it's a good deal for me. But now that I've thought a little bit more, and I realized that you guys actually have a lot more robots than you stated, this is not worth me buying. So this is the back and forth. The lawyers of Twitter are trying to pin this on Musk is a capricious guy who really doesn't know what he's doing, and since he's made that bid, he is liable for that. And the lawyers of Musk are saying, like what I just said before, that in a sense he was misled by public statements and he made a bid in good faith, and therefore this is a situation where pretty much Twitter is I don't know if you can use the word fraud here, but something along those lines, because you state something that you're not. I don't know what else can I use them fraud here. So this is the situation, and we believe at Orange Capital Partners, we spoke about this morning, and I want to convey just our thinking here because I think it's relevant for people who are involved in the situation, but I think it's more relevant also for people who listen to this podcast because they want to just learn about how to think and how it feels like to run a hedge fund, how to be, what kind of situation you're exposed to, what you're supposed to do with them, and maybe also how you trade that. This is not trading advice, and I'm not going to go into details of how we actually would trade this thing. because we haven't really traded anything. We don't have any position other than just long Tesla. We've been long Tesla for a long time. This has nothing to do with this situation. So again, we just want to convey our thinking because I think it's a good example, it's a good case study of a pretty hairy situation that you can be involved in as a hedge fund manager when you trade in these types of situations, particularly when you do M&A or special sits. So what we believe is that the judge will listen to both sides and decide that this is actually an SEC situation. This will be thrown back to the SEC's lap in a sense that he will say, look, it's not up to me to decide if this M&A transaction should go through because the crux of the system, the crux of the case here lies on the fact that somebody thinks they were misled. And if somebody thinks they were misled by public statements, that's an SEC problem, or even higher level. This could be, fraud, wire fraud, I don't know, one of those things where you really are questioning how public companies report and how the SEC goes after that reporting, because the SEC's job is to protect investors from bad actors in terms of public markets, meaning people listing shares, lying or making fraudulent statements. So if we put this all together, I think we can make an argument here that the judge most likely will throw this back in the lap of the SEC and say, I can't make a decision here in good faith because this is about fraud, this is about reporting, and those sort of things are not my strength. This is your strength. You should go after that. And what will be really ironic here is that if the SEC ends up with a lawsuit from Twitter and Elon Musk or both, because they're both attacking them, one party saying, well, you should have told us, and the other party saying you didn't protect. This would be the most ironic thing, because we also know about the history that Elon Musk has with the SEC. So if this court ends up somehow boomeranging back in the face of the SEC, this would be really ironic. We believe that the SEC is not doing a good job, in particular when it comes to social media or in general with media, because investors are misled. Investors, first and foremost, don't know how many bots are on these platforms. What does it actually mean when Facebook says we have 2 billion daily active users and all that stuff? And what does it mean when they claim they have targeted ads? And what does it mean when Apple does something and then all of a sudden $10 billion of revenue disappear? Shouldn't that be more clearly stated in the assessment of the risk factors of the company? So those are very interesting questions. I don't think that this is a situation where people should go to jail necessarily, because starting with Twitter and Facebook and Pinterest and Snapchat and all these companies, they probably don't know themselves very well how to deal with all of this. But it's worth looking into it. It's worth maybe digging a little bit deeper. And therefore, this whole situation, this whole poking up of dirt, and this whole situation could become actually a very interesting situation, and hopefully also for the betterment of financial markets. If we look at the stocks of media companies, starting again with social media, but even the sort of newer media companies like Netflix, streaming companies, they're all down between 50 and 80% from their peaks. Clearly something went wrong here. And it's not just because advertising revenue is coming down. I think people have lost faith in this new breed of companies, partly because they just don't know how to value them. They don't know what to believe in, what kind of metrics to believe in, what kind of statements to believe in. So a lot of things have gone wrong here, and I think some of the burden is on the SEC. And this particular case could actually show that the SEC needs to improve their how they deal with particularly social media companies, but in general also with media companies, because it's not very different with Netflix also. How can you tell me that you're growing and the market is growing and this and that, and all of a sudden you're not growing anymore? What is going on here? What's your churn? I mean, who are your customers? Why is your ARPU in India so low? Like, what's going on? Like, it's not very clear. And I'm not saying people are fraudulent by any means. It requires more work, and hopefully we can get a better grasp on the regulation of these situations. So to summarize, we believe that the situation between Twitter and Elon Musk could end up, that the court case that is pending now could end up being decided in such a way that the ball gets thrown in the court of the SEC, that the SEC has to decide if Twitter was fraudulent or not. That this is the crux of the system here. That is Twitter fraudulent by not reporting properly how many robots they have on the platform? If the judge does that, which we think is very likely, this would be, I would say, from a news perspective, a good news for Musk, bad news for Twitter, but even more importantly, very bad news also for all the other social media companies, because then the SEC would have to go and dig deep and understand, okay, what is fraud, what is just simply ignorance or stupidity, and that could have a lot of repercussions for the social media space. As far as we're concerned here at Orange Capital Partners, again, we don't have a position in this particularly. The purpose of this particular episode is to give people a sense for how we think about these things, because that's the purpose of the podcast, how it feels like to run a hedge fund. These are important situations that anybody who wants to run capital in sort of a hedge fund manner should be aware of. Thank you.